Let me first ask you about this acquisition. You know, I remember covering SAP as a young reporter 15, 16, 17 years ago, and at the time, acquisitions were a massive part of the strategy. Is this a comeback to that old acquisitive Waldorf-based company?
Well, Matt, you're still a young reporter. No, it isn't. We haven't done a deal in 3.5 years, but this one was too good to pass up. You know, this is really a company that helps us define this customer-driven growth revolution. Every CEO wants to be in touch with their consumer. They want to protect the privacy of that consumer. They want to interface with them in any channel on any device. And then they want their sales force to take a lead all the way through to the collection of money and the incentives that get paid out to the sales professional in any channel they're operating in. This completes us in a certain sense in the CRM category as the market leader. Callidus fills in an important space, and it's just going to help us take over CRM.
Bill, good morning. It's Guy in London. The cloud bookings look really strong. Can you keep this up? Can you maintain this kind of momentum?
Well, thank you very much, Guy. It has been a fantastic run. As you know now, we have almost $8 billion in cloud assets between the revenue and the deferred revenue. So it's a really big business, and we've done this only in the last 8 years. We said today we would continue to grow our cloud business at about 30% on a per annum basis through 2020, when I reiterated our long-term guidance. The company is firing on all cylinders. If you take cloud, software, and cloud, the operating income, we're the only company in our space with that trifecta of core, cloud, and operating income growth, all soaring in double digits. So yes, we can and we will continue this.
Bill, let me ask you about the currency headwinds that you face. I was looking at a note from Badr Helova, which is an analyst that has a buy on SAP, as do 23 of the 34 companies that cover you. But they say the currency headwind is more pronounced than they had modeled. Does it concern you, the strength of the euro right now?
I would prefer it wasn't as strong, for sure. So yes, there is a strong euro, and that does put headwinds on us from a currency perspective. But as it relates to the operations and what we can do to run the company, we're still blowing through our goals in spite of the headwind on the currency. So yeah, Matt, I definitely prefer that the currency was a little less strong. But what I'm excited about, you know, we're the only company in our space right now that's GDPR certified. That's this whole global data privacy. We have our consumer. We have the boardroom and that digital real-time enterprise connected to the back room on an end-to-end basis. In Davos last week, every CEO I talked to was feeling good about the economy at large, and they want to run their business simple. Take out the waste, take out the nonsense, give me an end-to-end view of my consumer to my product, and help me win. And that's what we do. So in any currency environment, in any environment, in about 25 industries in 193 countries, SAP will win.
Bill, are we going to see, the analyst note that Matt's referring to also talks about weaker than expected license momentum. Is that a blip?
No, you know, reality is we have changed the business model to a more predictable cloud-based model. So now 62% of our revenues are completely predictable when we start the year. Soon they'll be up to 75%. So we have transitioned now, where in 2018, more of the revenues of SAP will be in the cloud than any place else. We have also told the capital markets today the momentum climb on the margin now goes in full force. So you have a company that's highly predictable, it's cloud-based, and the margins are climbing. That's what we wanted. Now, as it relates to the core license, we're still growing. we're growing that core license at a couple of percentage points when everybody else in our peer group is in double-digit declines. So we're kind of giving you the best of all worlds. You can deploy the software how you like. Cloud is clearly the pervasive computing theme of the 21st century. That's why we grabbed a hold of it. And our core still continues to grow, unlike anyone else in the industry. So I'd say we're right where we want to be right now.
Bill, let me ask you, you mentioned Davos. I believe you had a lunch or a dinner with President Trump while you were there. You're in a great position to talk about capital investment that businesses make. And the president has said his tax reform, his tax cut bill has given businesses the confidence and the capital with the tax cuts that they need to start making investments. Do you see that happening? Do you think as a result of that bill, we're going to see more companies spend more money to improve their businesses?
Absolutely. I think President Trump's tax plan has been extremely well received. I was at a dinner, as you mentioned, Matt, with 15 other very large company CEOs that, by the way, were all my customers. I was very honored to be there. And they were all talking about their investment thesis and how they are increasing it. They're increasing jobs. They're increasing manufacturing. They're increasing output. The global economy right now and the theme at Davos was all about collaboration in a fractured world. But clearly, there was not a single CEO I talked to that wasn't feeling good about the economic momentum. I started my week with President Macron in France, met Prime Minister Trudeau, Benjamin Netanyahu, Prime Minister Modi, and every one of them, including, of course, President Trump of the United States, was bullish overall on the global economy. And the CEOs are feeling very, very good right now. So we're in a good investment ballpark, and I particularly think 2018 will be the year for investing in jobs, in manufacturing, and growth.